All right, I think we got everything. Let's see. Oh, let me bring up the YouTube page so I can see the chat. Good morning, everybody. Where is that page? That's not the page. That's not the page. Maybe it's this page. Not that page. Too many pages. Oh, too many pages open. No, that's not it. Hang on, trying to find the YouTube page so I can see your chat. Maybe if I do this up here. Where's the chat? That's not it. That's not it. Too many screens, Wayne. That's not it. Oh, that's it. There we go. So good morning, everybody. Maybe I need glasses. Maybe I don't need glasses. Hey, good morning, everybody. It is a Monday. Happy Monday. Looks like you see my basement design. Anyways, let me get this out of the way. So, good morning. It is a Monday. What Monday? Any particular Monday? Monday, April 23rd. Seems like a nice number. Monday, April 23rd, 2018. This is your daily Forex trading strategy session. Me. Brought to you by Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Namaste. Put your diamonds in the sky. Do these sessions Monday through Friday here at Forex.Today. 7:30 in the morning because it's a couple of hours before the stock market opens in the United States of America. It's also approximately London lunch, so it's a great opportunity for us to get together as a community and align our satellites. Please feel free. In fact, I encourage you to ask questions, get involved. We can go over your particular pairs that you want to. I do ask that you like, or I guess on YouTube it's a thumbs up. And also, if you do subscribe, when I do these impromptu live webinars on YouTube directly, if you are a subscriber, it alerts you immediately if you click on the little bell. So maybe you want to consider subscribing as well. So today I am bringing an agenda to the table. I'd like to cover the calendar for the week, so we can look at the news events. I'd like to take a look at the Commitment of Traders report. We haven't done that for a while. We can go over some swing trades that have occurred recently. And then, of course, I'll open the floor for particular currency pairs that you would like me to cover. There's also some fundamental stuff going on in regards to the 10-year Treasury, so please remind me. And then also, hey, what did Draghi say? Hey, what did Draghi say? What did Draghi say? Sound good? Hope so, because that's what we're going to do, Bubba. All right, so let me zip over. Let me get the site. Whoa, too many windows open. Hang on. Gee whiz, Windows sucks so bad. There we go. Hi, Bill Gates. Can I have all my money back, please? All right, let's move this. Aight, Chihuahua. So here we are at Forex.Today. Thank you for posting your trade plans. Beautiful stuff. It's Monday, so let's start with the fundies. Or not really fundies, they're news events, they're risk events. Not necessarily fundamental, there's a difference, but anyways, let's take a look at this. Aussie has some CPI coming out. I'm skipping over sort of the mediocre stuff like existing home sales, long-term trends in play already, so you should already know that. A bigger one, though, is inflation out of Australia. Will they raise interest rates anytime soon? How's import-export data. How's the economy doing? How's demand for commodities? Or, is there inflation in commodity prices? And blah, 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 blah. Is there inflation in Australia? And will the Reserve Bank of Australia raise interest rates anytime soon? Okay. Isn't it interesting? Right before you have Canada and Australia speaking pretty close together. Both of those are very interesting if you're interested in commodities and commodity prices. So anyways, there's a great opportunity to trade Asia. Okay, moving along Tuesday. There's news. It's not super important news, but it'll keep the market flowing. Okay, so I wouldn't make a big stink out of Tuesday or Wednesday. Okay, moving all the way to Thursday, the ECB interest rate decision, U.S. durable goods, which is actually kind of a chunky news event, but certainly this ECB interest rate decision is huge. Okay, some import-export data of New Zealand, yada, 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 yada. And, Japan is also making an interest rate decision today, or this week, I should say. So Thursday is ECB and Bank of Japan. Okay? And then Friday, GDP. There's some Eurozone news, but basically everything is going to be taken up by GDP. All right? So Aussie news, followed by ECB, Bank of Japan, and then US GDP. So that's the week in a nutshell. It's enough. It's enough news flow. It's also PMI week, It's also, real estate week, if you're interested in that kind of stuff. But those are the big headlines that I think are going to be market movers. Okay. Now, one thing I did want to talk about was Draghi. You might have noticed on Friday, Euro took a nosedive. And Draghi said at an IMF meeting, is that right? Do I remember that correctly? Anyways, he said that the inflation they've seen out of, and I'm paraphrasing big time, right? The inflation they've seen in the Eurozone of late, he figures is topped out. What? Yeah. Well, what's that all about? We're at a point now, guys, where inflation has been doing decent in the Eurozone over the last year or so. And by decent, I mean better than expected. And of course, expectations were zero, right? Negative, in fact. So things have been not as bad as people would have thought. Okay? Which means in a typical growth model, Europe should grow faster than the United States because the United States has already been growing the last several years, right? And that has attracted investment, especially when Europe was cheap 18 months ago. Now we're kind of at this point, guys, where this demand that you've seen out for Euro over the last period here, see this? This rise from 105, let's say, to 125, let's say, and even closer to 130. But let's say if this 2,000 pip rally in euro dollar is starting to hurt Europe. And what little inflation they have, they're not expected to have any more at this price. So what would Mario Draghi do in a situation like this? Well, the best thing to do is talk down the euro. Verbal intervention. And I see that happening now. So ECB wants the euro to fall. Okay? So what will that what kind of effect will that have on the euro? Well, you can see as soon as he said it, it fell instantly. So if you are a euro dollar trader, well, be cautious. Maybe it changes things, maybe it doesn't. Okay. Now that'll lead me on to the next bit. The 10-year T-note, the U.S. 10-year T-note, U.S. Treasuries. Well, they've been in a bullish market ever since quantitative easing, because by definition, the government was buying its own bonds and big banks were front running them by design. Okay, that's what quantitative easing does. So the whole world was front running the Fed, so they bought treasuries and then sold them to the Fed, and the Fed would prop up prices and all that kind of stuff. And we got to a point where the 10-year T-note was significantly below 2%. And there was a time in my life where I did a big speech on multiple occasions about the 10-year T-note. It was impossible for the 10-year T-note to drop below 2%. I used to talk about how all the different treasuries and how the world worked together in Newtonian fashion, like clockwork, right? And that if the 10-year T-note went below 2%, then like the 30-day would be negative, and we know you can't have negative interest rates. Well, now we do know you can have negative interest rates, but maybe not on the reserve currency. So the world has changed a lot since I gave those speeches. And for a very long time, the 10-year T-note was significantly below 2%. But of course, that's manipulated. Maybe in a normal world that would be impossible. But when the government is buying its own debt, anything is possible, right? So quantitative easing has ended in the United States, and the world is trying to get back to a more normal rates. And we've gone from, I forget what it was, 1.7% on the 10-year T-note. Then we broke above 2%. Then it went to 2.1 and 2.2 and 2.3 and 2.4 and 2.5 and 2.6, 2.7, 2.8, 2.9, 2.9999999, and then it went to 2.95, 2.92, 2.90, 2.88, 2.85, 2.80, 2.74, and all of a sudden we kicked off the 3.0 and dropped like a ton of bricks, right? That was only, we've done that in a few occasions, but we're only talking a couple of months ago. So we're back. We're back to the 3.0 or 2.999999 level today. And the world seems to want to break 3.0. And that's a very significant thing to debt traders, to bond traders, to treasury traders, fixed income traders, and it matters to things like your credit card rate, your mortgage rate, pretty much every rate, right? And here's the thing. If we break above it, it's very, 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 very significant. That means the bond market is probably going to be in a long-term bearish move. But I also think there's a lot of people sitting around saying, well, if I'm not supposed to hold euros anymore, maybe I'm supposed to buy some of these treasuries, because quantitative easing is still happening in Europe. What's the 10-year Bund out of Germany paying? It's still like 0.1% or something, like almost nothing, right? And now you can buy a 10-year T-note in the United States for 3%. All of a sudden, 3%, you're like, 3%? Sounds amazing, especially when you have no inflation, right? Especially if you're, living somewhere in the world where there's negative inflation still. So all of a sudden, 3% sounds ginormous. Thank you, 0.626, right? So we're talking about 2.5% spread on the Bund, 10-year note. So so that's going on, and that's going to affect currencies. All of this is a very, very interesting topics. Are people going to get out of euro now because the ECB is starting to talk euro down? Are traders going to suddenly buy the 10-year T-note and lock in the 3%? And if so, that drops that. that may, on the short run, strengthen the dollar, but then maybe on the longer run, if people then, if that drives prices up and yields down, then that could be short-lived, right? So, for example, we can hit 3.0, drop to 2.75, rally up to 3.0, drop all the way to 2.75, and we can do this almost indefinitely, okay? And I think all of this is related. The fact that we're hitting 3.0 and the euro dollar is dropping, I think is related. Now, it's not something we can prove, but I don't think it's a coincidence either. Okay. All right. So, hey, man, where's that like? Give me that thumbs up, bro. Please. Please. Okay. So, enough on the fundies. So, we covered Draghi speech last week at the IMF. We covered 10-year T-note yields. We've covered the news calendar. All right. Thank you, Ming. So now let's do some technical analysis. Boop, 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 boop. Okay. Let's start with the yens. Okay, we're kind of in a sideways-ish move, as you can see. Okay, kind of have a bottom there and kind of a top going here. I'm going to move this across. This is from last week anyways. You could see on this euro-yen, we did sort of rally up earlier and hit the monthly pivot and immediately stopped. Now remember, Draghi is trying to talk the euro down, okay? If global macroeconomics outside of Europe are improving, you should also see the yen weaken. And right now you can see all day since the opening, all day this currency pair has moved sideways, okay? This gray area is Friday's buy zone, my swing trading group. Okay, the Friday swing trading group had this down here as a buy zone, and so they should be all right. Now, relative to the yen, the US dollar is quite strong right now, and I'm wondering if that's people getting out of the euro dollar. So if they're shorting the euro dollar down or taking profit on the euro dollar up, either way, dollar should strengthen, and if everything else in the world is relatively good based on macroeconomics, we should be rallying up. Now here's the interesting thing. You see this this orange line? We've basically hit that target. This we drew 4 weeks ago. In fact, this move here was the third week of March. And then this rallied up into the end of the month. So really, this was 5 or 6 weeks ago we created this trade plan. You can see it was before the dip back into here because we had it coming off the 3A2. So anyways, going back to the third week of March, we had this up and down and rallying up to 108 and some change. And we've done it. Good job. Yeah. Planning trades 6 weeks in advance. That's nice, right? 90 people watching, 35 thumbs up. I just showed you a trade plan we put together 6 weeks in advance that now hit the target. 35 likes. So 2 out of 3 people are not impressed. Now they're like, whatever, Wayne. Whatever, bro. That's so obvious, Wayne. Wow, really? Thank you, Adam. I mean, planning things 6 weeks in advance. That's what we should be doing, right? Now check this out. This is the projected target for the month. I mean, it could go up to, let's say, 108.50. It went up to about 108.25. It can go up to 108.50. The projected high would really only be 108.75. But that's the projected high for the month. It's kind of time to bail out on this. Right? Okay. So that's that. Take a look at Aussie. Just a little awkward swing long here. The area of concern is 83. I'm worried about that as a bull. As a bear, you kind of want to sell at 83. Okay. So this is your sell zone up in here, 83 to 83. If I were a bear, let's put it this way. If I were a bear, I'd sell it at 83, put my stop above 83.50. Okay. As a bull, you can see I bought it, and my target is simply the triple top just below 84. Okay. So I'm in at 82.50 going for 84. But there's a lot of, like, this whole area here. All of this is my sell zone if I'm a bear, which means as a bull, if it comes up to here, that's where I get nervous. Okay? Okay? That's where I get nervous. Clear as mud, so to speak. So that's Aussie. Let's go over to Beast. Okay? What's the overall trade plan? Well, right? I might not be, right, a rocket surgeon, but it seems to me this channel is still valid at this point. Oops. Okay. Seems like it's still valid at this point. Maybe she goes up, maybe not. You can see I'm long at the bottom of the channel here. I'm long just off the weekly M2. And my stop is set here at weekly M4. And the problem is, as a bear, or as a bull, if it turns bearish and dips below, I probably don't want to be long anymore, because what will likely happen is it will rally back up, hit the bottom of the channel, and then collapse. Okay? But you can see the general move here. That big move that we had last week and a little bit of the week before, it's actually since the beginning of the month, right? The move we've had to the beginning of the month. Remember, we said this was bullish, but awkwardly bullish because it opened too hot. And I expected it to hit its target early in the month and then collapse. Well, check this out. It wasn't really early in the month. It was about middle of the month. It hit exactly the monthly R2, the aggressive target for the month, and then completely collapsed. Now, anyone that's taken my swing trading course at FX Bootcamp knows that in that scenario, the predicted counter trend is to move back to the monthly central. Well, that's still way down in here, so I don't know if we're doing that, but if we're going to do that, I don't want to be bullish anymore. So as a bull, this is kind of my last hurrah. I don't mind it coming down, making a 50% retracement, which it's now done. I kind of need it to go back up. The caveat to that general strategy is that you probably shouldn't be doing that off of the monthly R2. So it's like it's gonna work or it ain't gonna work. You know what I mean? It's sort of a binary move. It has to go up here or it ain't gonna go up. And that's because of the R2. That was our target on the 1st of the month. You should have taken profit by the 15th of the month and really taken the rest of the month off. Right? The beast may have been tamed a long time ago. Take a look at Kitty CAD. Very similar to the pound yen trade, except this is a much better, much easier trade to have been in. It was a better setup on the 1st of the month. Right? Just a very basic swing trade. Gave you an incredible, awesome, lovely awesome, incredibly awesome swing entry. Hit the target for the month early, was supposed to retrace, but didn't. But you could have been long and done. So you could have bought this on the 2nd of April and then been done for the entire month by the 11th. Like just done, walked away. But look what you would have missed. 2 days of nothing, one rally, complete retracement, which you know most amateurs would have lost money on that. And then another day and 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 another day of moving sideways. And now making lower lows. You could have been done on the 11th and missed nothing. What you would have missed is the opportunity to lose money. Interesting, right? So anyways, maybe, just maybe, there's another move in here. I don't know. But I could say, well, maybe I'm still bullish. Okay? I don't know how to measure this. I guess this low. Okay? I still have the opportunity to be bullish if I want. So I drop into a smaller time frame. And you can see that I bought the swing bottom. So my target for this would be a little higher. Where is my limit? There's my stop. Where's my limit, bro? Bro. Oh, I have it up there. So I'm going for R2. Okay. So if I'm wrong on this, which is very possible because I bought a lower low, very stupid, right? What kind of idiot buys a lower low? Well, one that's going to be ready to move a stop fairly quickly. So I have to decide, where am I going to be challenged on this? So let me get rid of this pivot now. So I just want to show you that I bought a 618 retracement. Right, that's not the worst thing in the world. Now dropping back into the smaller move here, I got to redraw this. Okay, if I'm going to be challenged by bears, it's probably going to be in this price range, right? There's this one, and then there's this area here is another big one because there's a psych level. This is the psych. So I have a lot of work to do on this. What? You see all that? So this is not going to be easy, is it? Well, we got the double bottom now and the higher high. I wouldn't be shocked if it came back and double bottomed and then go back up. So I'm probably not going to make money on this, but I might. It's just one of those things where, like the other one, if it's going to go up, it has to do it now. And if it collapses, it's very likely to head all the way down here, maybe even further, and I don't want to get into that. So my stops are quite close, if you've noticed that, right? So I am profitable, you know, but I haven't even really been challenged, right? These 25 pips or whatever I've made so far, that's like taking candy from a child, right? I mean, that's the easy part. Now the challenge is coming up. I'm still not confident. Okay? That's why my stop is so close. All right? Right? But of the swings I've taken, 2 are break even, 2 are profitable. This one I missed. You can see I wicked but never got put in. It's too bad. I don't know why, but my stop is 2 pips above the entry, and apparently I needed to go 3 pips above the entry. Looks like I missed it by simply the spread here. Must have been like 1 pip I missed this. But the idea on this was, you know, buy it off this bottom here, and maybe she kicks up. You notice it seems to be playing the monthlies more than it is the weeklies. So this one, since the other ones are still basically slightly profitable or at break even, I kind of want them to move first, and maybe I can get this to make a higher high, higher low kind of scenario. Okay, so I'm going to take this off now. I'm going to delete this because that was a limit entry. But I think you can see my strategy that I was trying to, right, was it made the higher high, it did retrace, and I was trying to buy it off of this M2 and didn't get it. Missed it by a pip. Should be up 10 pips profit by now. Isn't that funny? Yeah, Ming says looking a little fragile. Sure. Yeah. Okay. So I might keep my powder dry on this one, let it come down to the monthly central and buy it. So right now, if it came down to 77, I think I'd buy it. So why don't I do that then? Why don't I do, oops. How about 77.07? I buy the sucker. We'll throw that working order down there. Okay, ist gut? Ja? Happy? Ja? Okay. So I want to move straight into the commodities here. Okay. Our goal this month for the month of April. And by the way, I hope you're getting closer and closer, week after week, month after month, year after year of working with me. I hope you're getting closer and closer to the point where you're saying things like, my goal for the month of April is to drive oil from $62 to $70 a barrel. This is what we said last month, guys. I mean, it's redonkulous, right? We were at 60 bucks a barrel in March. It rallied up and we're like, aha! So our goal is to have it fall down to 62 so we could rally it up to 70. That was our goal for the month of April. And as you know, last week we hit 69.5. All right, we're off by 50 cents. But you can see we had two actual goals of 68.90 and 70.35. Okay? 70.31, I'm sorry. And the other target was actually 68.93. Those were our actual targets, right? So let's just say 70. You notice like this whole gray zone was the target. That's what this giant X is. We were talking about a way down here, which was hard to believe. And so we hit that goal. Now, what does this mean? First of all, oil prices are going up. So there's either a shortage of oil or increasing demand or both. And we can just move the supply and demand curves and show how prices would go up. Okay? Ideally, it's a demand item. It's a pull. Okay? Prices aren't being pushed up because of a shortage. They're being pulled up by demand. That would mean healthy global macroeconomics. That would mean a strong CAD. That would mean really a strong everything commodity. It could also mean, because of the positive macroeconomic or future expected macroeconomic outlook, weak yen, weak Swiss franc, weak dollar, all that kind of stuff, right? So it can mean a lot of other things. But it also means inflationary pressures. Whoa, what? So if Draghi can talk the euro down, and if oil prices keep going up, inflationary data out of Europe will improve, and the ECB can continue the end of their quantitative easing. Neat, which is the beginning of interest rates going up. And the funny thing is, as soon as that happens, the euro will strengthen again. It's this ebb and flow. It's like a tug of war, right? What else would it mean? Higher interest rates in the United States. The only concern here in the United States is the flattening of the yield curve. So let's say the Fed's going to raise 2 more times. But if oil prices go up, they might have to raise 4 more times or 5 more times over the next, a year or so, or 2 years, But what'll happen is, if the lower bound, I guess I have to do this reverse for the camera. If the lower bound raises faster than the higher, meaning, an overnight Fed funds rate versus a 30-year bond, right? If they raise at different rates, then it flattens, and that's not really good. So one thing to look at is the rate on the 2-year and the rate on the 10-year. There should be a spread between the two. The more narrow that spread, the badder it is. You want to see a reasonably healthy spread. In fact, I'd love to see a very vertical yield curve where borrowing money overnight is super cheap, but if you invest your money for 30 years, you get a huge payback for your long-term outlook. I love that kind of stuff. That's where we should be. What we don't want to see is, if you invest your money for 2 years or 10 years, it doesn't really matter. You're getting the same return. But I think you would agree, if you locked your money up for 10 years, you're facing more risk, right? Imagine it's like in the United States, they call them certificates of deposit, right? A CD, which means you give your money to a bank. The bank locks you in. You're not allowed to withdraw, but they pay you usually a higher interest rate, right? So imagine you had to make a decision. You're going to lock up your money. No matter what happens, you cannot get it back until the end of the maturity, okay? Think about it that way. No matter what, there's nothing you can do to get your money back. You have to choose. You get 2% to lock it up for 2 years, or you get 2.1% if you lock it in for 10 years. Right? And no matter what, you lose your job, the economy crashes, a zombie apocalypse, whatever happens, you cannot get your money back. Is the 0.1% difference in interest rate worth the extra 8 years of risk? What if you need the money? What if you get cancer and you need the money for medical purposes? Sorry, can't get it, right? Is the 0.1 enough to compensate you for that risk? Or would you rather to have it in cash? And all of a sudden everyone's like, well, I don't want to lock it in for 10 years. Well, what about 30 years? How much more do you need to get paid if you locked up your money for 2 years versus 30 years? You're like, well, I don't think a zombie apocalypse is going to happen in 2 years. It could happen in 10 years, but in 30 years, it's almost for sure, right? But it might be the good zombie apocalypse. It's the cheerleader one. The cheerleader zombie apocalypse. Oh, yeah. That's the best kind. And then the sequel. Cheerleader zombie versus nurse zombie apocalypse. Yeah! Who's the best zombie? The nurses or the cheerleaders? Yeah. Sorry, bad coffee today. Anyways, so a flattening yield curve, yeah, it's a little frightening. Night of the comet. But here's the big stuff, right? Our plan was to buy it at 62-ish, rally it up to 70-ish. Boom. We got our $7.50 to $8. That's $7,500 per contract. I mean, nice. We've had a lot of swing trades that have really treated us well this month. So thank you, swing trades. Just full disclosure, I was thinking about buying this, even though Draghi's talking this down. Before the webinar, I had my eyes on this. Now it looks like I'm missing it. Thank you, everybody. But what if the euro dollar was going to go back up? Wouldn't you want it off this monthly pivot? So I was waiting for it to come down 5A cross. So I'm missing it. So maybe later today, if I were a bull, I'm not saying you should be or have to be or want to be, you would want a double bottom first, I think, and then rally it up. Conversely, if you're a bear, selling off that 15-minute 21 ain't a bad idea. You should always look left if you're doing price action. You should always look left, bring it across. And there's another one here. Look left, bring it across. Okay, that may be the sell zone in a couple of hours. Don't really know. Gold, more sideways. Now look how tiny the range was last month. But our swing long, it was in a buy zone, hit the sell zone, right? It hit the buy zone, went up, hit the sell zone, went down, hit the buy zone, went up, right? And then finally went up here, and then wimped out early, and then went back up, and then wimped out early, and now we're back into here, and this is a ginormous sideways. Okay, ginormous sideways. The support right now is 1321. I have to decide whether I want to buy that. I am hoping for positive global macroeconomic news. Maybe that would rally the gold. That would be great. I want all commodities to rally. I'd like the dollar to weaken, but right now, as I had mentioned before, Draghi's talking the euro dollar down, and the euro dollar is approximately 40% of the entire foreign exchange market. So if Draghi successfully talks euro dollar down, gold will come down because dollar will be strong. I kind of think it'll be short-lived, and no matter what Draghi says, the market's going to do what it's going to do. But on the short run, you're vulnerable. But I think you would agree there's some sort of support going on here. Oops. Okay. And there is a weekly. Now, if I drop into the hourly, we got a weekly target. That sets us up for the counter trend trade. Okay. That means if you know how to counter trend trade, you'd be buying it down here at 13.24, and you're expecting a rally up to 13.47. And that's that. Basically a bounce between the monthly central and the monthly M3, but because we're in a sideways range that it just used to be slightly tilted to the north, I would hope to buy it at 13.25 and get this up to 13.50. Long run, I could mean weeks, months, and even years. Typically, when I mean long run, I'm basing it on central banking policy. So, Rin, how long is the Fed going to raise interest rates? Weeks, months, years, decades? But that's what I'm talking about. Whatever that means. Because it's not, I mean, there's some seasonality built into all of this, but really it's central banking policy, and central banking policy is based on current economic conditions and future expected economic conditions. So, Rin says, question mark, well, then that's what you need to be figuring out. Okay, that's what you need to be figuring out. Okay, I want to just look at high yield for a second, because if we get an improvement in macroeconomics, if oil continues to go up, if gold goes up, we've seen a rally in iron ore recently. Let me check copper. Yeah, copper's still up quite a bit. So we've had a rally in copper, iron ore, gold has been up and then sideways for a long time. Over the last month, over the last 6 weeks, oil has rallied from 60 to 70. It's been a long time since we've been at $70 a barrel. And I think if you start looking at some other things, they're not crossing my mind, but I remember reading over the weekend some other prices have been up. I'd like to see a global rally in commodities. And we did talk about this maybe a year ago or so, somewhere between 9 and 18 months ago. I did a whole day where I said, this is it, guys. This is it. Let's expect a rally in all commodities across the board. And we started talking about these things. Here's the thing to look out for. I expect the 10-year T-note to touch 3% today. And I expect then a high probability of it collapsing. So, like, let's say it goes from 2.9999, it could like pop up to 3.1, 3.15, and then I think it could come all the way back down to like 2.75, 2.85, and that's a big, pop and drop kind of scenario in the Treasury market or the bond market, if you want to call it that, or the fixed income market. That's a lot of noise, and that's going to affect all things, in particular currencies, right? The thing to watch for is if we get above 3 and stay above 3, this will mean commodity rally. This means inflation rally. This means stock market rally. This means higher inflation across the board, which means over the next 12 months, interest rates around the world, in Australia, the United States, Canada, New Zealand, even China, you're going to start seeing inflation. Even Japan, for crying out loud, is going to have inflation because they import all their energy. And if oil is at $85 a barrel by the end of the year, then holy smokes, then even Japan's going to have inflation. So really look at that. So now we're talking about commodity prices impact, or not even further back. We're talking about fixed income yields, not prices, impacting commodity prices, which impacts asset prices, which impacts inflationary pressures, which impacts interest rates, which then impacts the value of currencies. Wow, right? Can I get a thumbs up for that, for crying out loud? Or are you getting this from 15 or 20 other YouTube gurus? Look at me, I drive a yellow Lamborghini. Right? Sorry, all I have for you is a Harvard education. That's it. Sorry, no yellow Lamborghini. So anyways, that's what I'm looking for right now. Do we see it in peso? Next week we will. We don't see it this week. We'll see it next week. Okay? Do we see it in Turkish lira? No, we do not see it in Turkish lira, not against the euro. But if Draghi does talk the euro down, you're going to see maybe a movement on this one. And that's very high yield. Do we see it USD versus ZAR? Do we see a rally in ZAR? No. But seeing it now isn't necessarily the most important thing. If you did see a rally in ZAR, when would you see it? Well, what if the US dollar weakened? What if gold prices went up? What if the world got into a risk-on move? Then this would start to head down. Well, when would we expect this to head down? Well, let's put it this way. On the first day of April, this was our buy zone, and we had a target between 1221 and 1233. Well, we hit exactly the middle of that target. So what if over the next several weeks we had a move like that? I would expect it to start here. I would. That's the whole point. That's what this whole gray zone is. And I'll further highlight it this way. I would expect that downward move to start where we are now. Maybe not right this second, but at this exact price. You can go a little higher. I'm okay with that, right? You can go up to here. But I would start thinking about it now. Okay? I would start thinking about it now. Hua? So on a small, that's a daily. So how about this on the hourly? What would you see on the South African Rand today? Are you okay with the fact that we've hit the weekly target already? It's the first day. It's the first day of the week. We're done for the week. So what would you see now? Down, 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 up, 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 maybe double top, down, down, down. How are you putting this together? How about down to the 55, up to the M4, and then sell that? So what I'm suggesting is this heads down to here, and then we hit something like this, and you know what? Yeah, and then and down. Or you sell it now. Your trade plan earlier could have been traded up into the weekly target, which we know is between 1220 and 1224. I mean, look how specific this is, right? Once you get up into this area, and really, if you're including the monthly, let's do the monthly now, between this 21 and this 34 area, okay? Once you get up there, maybe you say to yourself, I'm taking the 5A cross down. Or you say to yourself, you're taking the second 5A cross down. So 5A cross down, and then 5A cross up, and then 5A cross down again. Whether it happens here, here, or here, maybe that's your plan. But do you understand we're thinking about next month today? We're already thinking about May. If you sold it here, I'm thinking about between now and the end, between now, April something, and June 1st. Like, holy smokes, eh? Yeah. Oh, for sure. I'm already thinking the next 6 weeks in advance. I'm not saying it will, I'm saying it could, and I need to watch for it and maybe start tiptoeing some trades in. Do I see it in peso? What did I say? Nothing says down on this peso. Nothing. Probably going to sell it next week. What? Yeah, Wednesday or Thursday I'm probably going to sell this next week. How good does it feel to be able to say that? Nothing here says down. Yeah, Wednesday or Thursday I'll probably sell this. Nice, right? And you're like, well, Wayne, what makes you say that? My awesomeness and my modesty. I'll tell you next week. Right? Yeah, I'll tell you all about it next week. Okay? Once again, if you get a good combination of macroeconomic news and Draghi talking down the euro, maybe you sell euro Turkish lira, right? And that has a huge yield, right? Huge. Yeah. Well, a lot of you in the chat are saying awesome things, and thank you. I appreciate your positive feedback. 111 people, only half have given me a like. So, yeah. If you are enjoying this, please give me a like. Just show it. Come on, it's not a big deal. We got a lot of requests for pig dog, so let's now move to the third half of the episode, and I will take requests. Pig dog. Okay. Let me change the template. Okay. Well, you can see there was a clear sell last week. By clear, I mean a cluster between monthly resistance and weekly resistance. So what kind of buffoon would have bought it up there, huh? Like, just imagine some idiot was buying it up there. What a fool. Okay? So now it fell and fell hard. What's going on with the pig, right? The Great British Pound. Well, it's falling, right? And it's difficult to be able to catch it. What you want to do is sell rallies, and it hasn't done much of that, or buy bounces. You had maybe an opportunity here, but it didn't develop. And then you had an opportunity when the market opened, 12 hours ago, 14 hours ago. But that was very short-lived. The next real opportunity, there are two. You could buy it around 39, or you can buy it around 37.50. Those are the only two places, and that's where you want to see sort of approach that price. And then on a smaller time frame, like a 5-minute or a 15-minute, you see like double bottoms or higher highs or moving average crossovers or oscillator crossovers. Do your basic technical analysis. But as a buyer, those are the prices I see. As a bear, it looks like you got to have this rally very significantly before you can sell it. And I just don't think that's happening today. So it's just like one of these things, like last week you had an obvious sell, and there hasn't been easy sells on it since this move here. Okay. So that's that. Up here, very obvious. This move here, obvious, but still a bit of risk because there's still bulls in there, right? Not on this time frame, but on a different time frame. And if you got that one right, great, right? But now there's no sell on Friday. There's no sell today. For you to sell this is going to have to go up 150 pips. Like 150 pips, that ain't going to happen today, right? Adam says Mark Carney's comments on Friday didn't help. Well, yeah, all of this is central banking related, right? So imagine Carney talking down the pound dollar, right? And Draghi talking down the euro dollar. That brings dollar strength. Because now we're talking over 50% of the entire market. But what if that is short-lived? Okay? How about this? If I was redonkulously aggressive as a bull, I'd be thinking about buying now. It's not there. It's not on the charts. But I would start getting into my buying mood. I think we're a week early, though. So I'd like this to kind of monkey around for the next week or so. And I wouldn't be shocked if I was buying it not far from this price. But for right now, let it fall to 39 and some change, maybe even 37.50. Let it fall, and then we'll talk about it. But I wouldn't be shocked if I was long at 39.50. But what I mean is it falls down and then it comes back up and then it falls down again and double bottoms and then comes back up and then gives me 1, 2, 3. And it has to do with next week's pivots on top of next month's pivots, and it just hasn't happened yet. Okay. Any other requests? That one was requested several times. How can I help you? How can I help you? What would you like me to cover? What currency pair? All Swissy pairs. That's it? Okay. Euro yen, I thought we did, Chrissy. You'll have to watch the recording. Okay. Okay. So last week, Euro Swissy was dead. Plus the psych level of 120. I mean, come on. Aussie Swissy last week was dead. Kiwi Swissy last week was dead. And Pound Swissy last week is dead. So you've either taken your profit last week for your monthly swing trade and you're filthy stinking rich and you're out buying your yellow Lamborghini. Look at me, I'm a successful Forex trader. I have a yellow Lamborghini. A Gallardo? Anyways. So now what? Well, you know we were in profit zones last week across the board. So you should have been taking profit. And if you're really a cheeky monkey, you would have been selling these as scalpers, depending on whether you're a bull or a bear. But you can see this target was achieved, done for the month of April. April is done. This one, look at this, how beautiful this setup is. I even drew it for you. Look at this, like, oh my gosh, what? Inverse head and shoulders, what? Gorgeous. It's dead now. Now what? I don't know. What are you going to do next month? Now, the only thing is, if the swing long is done and you should have taken your profit, that gives you the opportunity to scalp short, right? Okay. Same thing. Kiwi went a little too far. Okay. Look at these beautiful entries, guys. Like, this is such an obvious swing trade. It's a little too bullish. It reminds me of that pound yen. But you know, the prediction in these setups is that we're going to hit the target early, and that means there are counter trend trades, right? Anyone that's taken the swing trade course at FX Bootcamp just simply knows that that sets you up for a counter trend trade. Whether you get it or not, we don't know. But you're thinking on the first day of the month, you're like, oh, wow, if it sets up like this, we're going to be taking profit early, and we'll probably even be counter trending this back by the end of the month, which is important. It's important to be thinking this way. Your expectations help you see the reality, right? On the first day of the month saying, okay, well, we're definitely bullish here. And unfortunately, I'm out of position. So it's going to move quickly, which means we're likely to hit our target fast. But that means in the next week to 2 weeks, I should be booking my profit. And not only am I booking my profit, but that typically creates, short to medium term tops, which puts me into a counter trend trade in the second half of the month. But I should be scalping down. So I'll swing north and I'll scalp south, and then we'll reset this by the end of the month. Isn't that great to be thinking that on the first day, right? And some idiot up here is buying. Just think of that. Like, clearly doesn't know how to trade, right? And at one time in your life, that might have been you, way up here, still buying. You're kidding me. Now look at last week, guys. That's a weekly swing short. There's no doubt about it. Absolutely no doubt about that. So now what? Well, are you in a good place to buy if you're a bull? No, not really. You're coming up to a monthly pivot. You're coming up to, we're at a psych level. We're at a weekly support. I wouldn't sell here either. I think if I bought it, I'd just be scalping north and then prepared to take it south again. If I were me, that's what I'd be thinking. Right? But even then, I look at this and thinking, at that price, I'd just walk away. And then lastly, let's quickly look at pound Swissy. Look at this. I even have it all highlighted for you guys, or I might have done this for the swing trading group. But I have it all boxed in and stuff. Look at this. Up and down and hit the target for the month last week. I mean, this is an overlap of weekly M4, monthly R2, then 100% retracement, then a lower high, then a lower low, then a lower high, now into here. Absolutely beautiful stuff. If you're a bear, it opened the week out of position as a bear, which means if it's going to fall, it's probably going to hit this 200 EMA in the next 72 hours. Okay? In which you should probably take profit on your short and walk away. So that means, it might be Tuesday and you're done your pound Swissy sell. It may fall farther, but that's irrelevant. It's just irrelevant because you only have your plan and you can only plan what's logically predictable. After that, it's a crapshoot based on at least monthly and weekly and daily analysis. Maybe use further out analysis, but I don't. Okay, so there's a brief coverage of the Swiss franc pairs. We had, they all set up on the 1st of April for a rally, and we hit the targets mid-month, and you should just be done, or scalping short. But even now, you're so unbelievably late on scalping short that I don't think you should scalp short. You're just way too late. Yeah, no problem. My pleasure, Sean. Okay, Aussie dollar. Sure, Katrina. I think I have it on my scan, so we'll see. Yeah, so we'll see what we did last time. Okay, this one totally collapsed on me. Okay. Totally collapsed on me. Death by Aussie. All right. So I've been hoping for positive macroeconomic news. Haven't been getting it. To recap the month, it opened at a beautiful entry. We were long this, then we trapped it, then we were long this, then we trapped it, we long this, and it never got above M3. Now the problem is on a monthly basis, that's where bears sell. So we topped out once, dropped back to the central, double topped, and then this whole thing collapsed. But we had the RBA news and a bunch of other things, and then of course both Carney and Draghi are talking down their currencies, which strengthens the US dollar, and blah, 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 blah. So this one I got wrong. On the 1st of the month, we said it would go up from, what do you want to call this, 76.5, and our target was 79.5. So I said it would go up 300 pips. Unfortunately, it only went up 150 pips. I'm sorry. And then it collapsed basically in a day. What we did in 3 weeks was gone in a day. Boo. Okay. And it happened at a pretty logical area. I mean, the M3 is expected. Price action wise, this is expected. It's just unfortunate because we were hoping, right, this would have its opportunity to move up. But of course, hope is not a strategy. It's a theory. Improving macroeconomic data would take me north. If you had disagreed with me, you would have been short this a week and a half ago at this 78 level, and your target would be here at 75. That's it. So if you were a bull, you had an opportunity to make somewhere between 100 and 150 pips. And if you're a bear, you sold at 78. We're now below 77. So you're about the same. But at least your target now is still down here. You're just testing this area now, right? You're just testing the support. So we'll see what happens. But if you're a bear and you did sell at 78, let me highlight your target. Okay, your target's down here, and you got paid. And this goes back to how I like you to trade. How I teach you to trade is to have a bias, have your setups based on long-term fundamentals or long-term technicals or whatever, but have a longer-term view. Have theories, and then set up your trades based on the technical entries and exits based on your theories. So in that case, if the market agrees with your theory, you get paid. If the market disagrees with your theory, you don't get paid. Meaning that your theory could have been bullish and you set it all up and you had lots of entries, but the thing is, in here you're not selling, you're not selling, you're not selling, you're not selling, not selling. And if you know how to swing trade, if you're a bear, then that's your theory, because you have the lower low, lower high, lower low, lower high, lower low, lower high, then that's the perfect entry. That's a really good entry down in there. Let me go back. Okay? All you had to do is have that theory and be ready and waiting. If you had sold up in here and had your stop above, great trade. Like totally great trade. Okay? Beautiful trade. I happen to be doing the exact same thing in reverse. Okay? Down in here, buying and then step up and buying and step up. And right? Look at all these step ups I had for you guys. And it was supposed to come down here and rally up, and it actually did, and collapsed. But collapsed at almost exactly the price you would expect it to. See, I wouldn't expect it at this price, or this price, or down here. Well, I guess it could have. But this is the primary, right? Straight out of the training course videos. That is the price, 78,000. I would expect this to collapse. And it did collapse. But as a bull, all it does is knock me out for profit. And if you're a bear, you're getting paid. And we don't even know if it's going to break below my original support. This might just be a ginormous sideways. But you know what? That would make me feel even better, because based on our basic analysis, if you're a bull, come on, this thing won't grab. If you're a bull and you did your job right, you made over 100 pips profit. If you're a bear and did your job right, you made over 100 pips profit. And at the end of the month, there's still a likelihood that nothing actually happened. This could just rally back up into the middle. And we could just be at somewhere between 77 and 77.50. And someone that, got on a spaceship, left for a month and came back to Earth and said, what happened to the Aussie dollar? You'd say, nothing. Same price. Okay? So, guys, that was a full, hour and a half? More than an hour and a half. No, almost an hour and a half. If you enjoyed today's webinar, would you please visit tradersway.com and open an account, even a demo account. Give us an opportunity to show you our execution speed and our spreads. Some of these yen pairs I was picking up for like 1.1 pips. Ridiculous. And we also have world-class customer service and really good-looking analysts. Also, would you be so kind as to give the thumbs up thing here on YouTube? It does matter. And if you want to attend more of these webinars, subscribe to YouTube. They'll give you an alert when I do live streams like this. Or you could visit Forex.Today and register there you can review our trade plans and such, but most of the time I host the webinars over there. So I hope today was worth your time. I know your time is valuable, and this was an investment of that time. So thank you for that. I appreciate the loyalty and respect you show me every day. Peace on earth. May the pips be with you. May your profits be above average. And I will see you tomorrow. Cheers. La, 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 la. Where is the webinar software? All right, here we go. Stream's almost done. On 3.